George. This is Real Talk with George and Frazier. Frazier's mobile today, so he will be joining us from his mobile phone, so that should actually be good. Now, as we all know, when you're on your mobile phone, it really depends on your mobile cell phone network. It's not as steady as your Wi Fi connected line at your house or more stable, but he should be logging in and we should be talking about the show today. So bear with us. We also have another great guest today. We have a CPA today from, it's going to talk about um, business, not just business per se, but better business builders. And I like that. It has a little bit of a ring to it. Let's bring him right into the show. Well, actually, Joe, if when you're ready, give me a thumbs up. How you doing?
How's it going, George?
Going pretty good.
Looking
Going
forward to
pretty good. Absolutely. Thanks for being on the show. Frazier's mobile today, but he will be joining us shortly. Um, Tell the listeners and fans a little bit about yourself and your business.
I'm sorry. Oh, we're live already?
Yes, sir.
Oh, wow. I'm late then. Sorry about that. I
It's
usually
quite all
try to
right.
be early, but my excuse is it's the middle of tax season. We just got done with our first major deadline, which was March 15th, which is the corporate and partnership deadline. And, we've experienced explosive growth this past year. So we got a lot of new clients and it's a lot. And so that's basically what I'm doing right now. To give you a brief introduction of who I am is, my name is Joe Dichiara. I'm a CPA extraordinaire, I like to call myself. And I'm actually an entrepreneur that happens to have a CPA license. I've been doing this over 40 years. I didn't want to do accounting. My father told me when I was 17 that CPAs run businesses and other businesses ask them for advice. So I didn't know that meant I was going to be preparing tax returns and doing bank recs for people. But it's been a great ride, and I've been blessed. We have a great team to back me up now. And that's what I do. I'm here to serve small business owners.
Okay, nice. So, in that vein, could you tell the listeners a little bit about, let me see if I get this name right, pardon me. Bedrock Business Builders. When you say business builders, what are we talking about per se?
Uh, Thank you. People usually ask me how to pronounce my name. Bedrock Business Builders, I guess, is a little bit of a tongue twister also. But it's an idea that I had years ago where I really got disgusted, really sick and tired of seeing small business owners fail
Hmm.
for the wrong reasons. It wasn't for the reasons that you hear, the reasons that are public, uh, lack of cash, bad management. All of those things are true, but usually for larger established businesses. What I was dealing with were the startups, the people that had an idea, a dream, a desire to be out on their own, control their own destiny. And what happened to them was they would be shocked, a lot like I was when I became an accountant. They don't realize what they're up against
Hmm.
when it comes to taxes, compliance. And what I saw was after a couple of years, they would go through a lot of pain and suffering. And so Bedrock was my solution to help solve that problem, to find out why over 25 million business owners are still classified as sole proprietors. And I found out why. It was because of a lack of good information, lack of knowledge, uh, and misdirected and misguided information that's out there on the internet. So Bedrock is really a combination of education, knowledge, uh, networking, masterminds, and as a side thing, we do a lot of bookkeeping, tax preparation, because that's what's the foundation of their business. So that's where the bedrock comes in.
Right, right. I like that. As a small business owner myself, I am listed as a sole proprietor. So when you talk about education purposes, um, I guess many of us use it as it's easy to do that and get into it. But what are some of the steps that we're missing? Look, I'm looking just for a little bit of tidbits now, some education for me, just in case I did it wrong over the last 14, 15 years.
Well, it's not that you did it wrong. You might have been able to do it differently and save yourself a ton of money, protect yourself from being audited. And the easiest thing to explain is that when you're a sole proprietor, you don't get any tax benefits. You don't get to control how much you pay in taxes. And when you find out that for every $10,000 in net profit, you're paying $1,500 just in self-employment taxes, that's a pretty big expense,
Hmm.
especially for a small business owner.
Right.
So when people are in business for a while and they get over that, the people that are lucky enough to bridge that gap to from being a sole proprietor to being an entity, they quickly realize that you have more control. You can decide how much of a salary you pay yourself. You could decide what your year end is. And you're most important, you're less likely to get audited. And the reason for that is most sole proprietors don't have professional guidance. They don't really know how to keep books and records. So they're easy pickings. It's like shooting fish in a barrel.
Okay, so when you say sole proprietor, I just want to break it down just a little bit more for some of our listeners who are not business savvy. Sole proprietor is your social security number where you get a tax ID number and you run a business. I've seen that with landscapers and a few other people that are just carpenters, so forth and so on. When you talk about entity, we're talking about LLCs, LPs, am I correct? No?
Now, okay, so that's another misinformation. Hello, Fraser. I'm glad you could meet us. Yeah, it's amazing. I have to say, things like StreamYard, the fact that we have these cell phones, it's made the world a lot smaller and a lot easier to give this information to people. So
Absolutely.
I'm still admit, we're in front of we could be potentially talking to millions of people here,
Yeah,
not only live, but in the replays.
absolutely.
So the LLC, I'll give you a brief history. The LLCs were created by rich uh, people that were investing in things like oil wells, cattle, coal mines. And the only way they could invest in what they called limited partnerships. Now, that meant you were limited to how much you can write off. So they weren't getting all of the tax benefits. The only solution to that was to be a general partner where they had all the legal responsibility. Well, they didn't like that. So at the state level, I believe it was in Wyoming, they created the LLC.
Right.
The LLC was a new kind of entity that provided the legal protection while also giving them the flow through tax write-offs they wanted, like the depreciation, the intangible drilling costs. So that's why they were created. They were not created for individuals that are running a small operating entity. LLCs have uh, are a great benefit for other uses when you're doing rental real estate. Uh, there's also other benefits that we can't get into when it comes to doing more complicated partnerships and stuff like that. But it
Right.
only gives you legal protection. The IRS does not recognize an LLC. So if you're a single owner LLC, the IRS calls you a disregarded entity.
Hmm.
In other words, there's no form for you. So you default to being a sole proprietor for tax purposes. If there's more than one owner, you default to being a partnership, which is just like being a sole proprietor, only there's more than one person. But there's solutions to that because you could actually, if you're an LLC, you could convert to being taxed as a corporation, and then you can take another step and be taxed as an S corp, which is, in my opinion, the best way for a small business to do business.
Well, let me ask you another question when it comes to that, an S corp, because I heard that. Well, I didn't hear. I was reading that S corps are really complicated. You can only give out 100 shares. You have to have all these meetings, and if I'm a small business operator working day to day, so forth and so on, I don't have time for meetings. I don't know what shares are that I'm supposed to be giving out or keeping. How do we navigate that to make it real simple for me?
So this is another one of those pieces of information that just makes me shake my head because it's on the Small Business Administration website. It's on the IRS website. They tell you, yeah, being a sole proprietor is the simplest form of doing business. What they don't tell you is you don't even get to choose that. There are what I call accidental entrepreneurs, people that go into business, they don't know that they're a sole proprietor. People like Uber drivers, people like that are driving the Amazon trucks now that are
Mhm.
considered independent contractors. So they're shocked. They're shocked at the end of the year when they go to do their tax return. If they make, like I said, if they made $10,000, they're paying $1,500 just in self-employment tax.
Hmm.
Okay, so self-employment tax, when you're an employee, you pay half and your employer pays half. Most people don't feel it because they get their net pay. They're not
Right.
paying it at the end of the year, and it's not a surprise. Okay, so what the government says, the information is, oh, it's more complicated to be a corporation. And they're right. They're right. Let me explain how complicated it is. On the issue of the amount of shares, okay, you're limited to 100 shareholders.
Right.
That's one thing. Issuing the shares is simple. You can buy stock certificates through uh, one of the printing companies. It's not that, and all it is you issue shares to people, and it becomes like a check that they
Right.
can actually endorse. So that's how complicated that is. But let me talk about the meetings. Some states require that you have a board of directors meeting every year. So imagine this, you're a single shareholder in your own S Corp and you're required to have a meeting. Who are you going to have that meeting with?
Exactly.
Yourself? Seriously. You're going to, so I could have a meeting with myself and document it on a Post-it note. And if I have shareholders, I could have a Zoom meeting,
Right.
record it. So how, yeah, oh my God, that's so complicated. I better stay away from this. Forget about the fact that I could save tens of thousands of dollars. I don't want to have that meeting every year. Uh, and let me say, if you are at the point where you want shareholders, you probably need an attorney and a CPA anyway. So you're going to have that guidance. But to tell people that it's too complicated is really a lie. It's a lie. And that's what, and when I started seeing this stuff, because I started doing this research about 4 years ago, I was like, why are they using uh, these reasons to not be a corporation? And
Right.
the conclusion is they don't want people to be corporations because they can't control corporations. And when I say that, I mean the machine, the IRS and big business, the banks, the insurance companies, they have less control over corporations than they do over individuals.
Right.
Gotcha. Gotcha. So let me ask you a question too. Also, I heard a lot of myths out there. Also, like everything taxes between a home based and traditional based business. Like, what are some of the benefits and disadvantages of both?
So again, when you're a sole proprietor, first of all, almost everybody's working from home now.
Right.
So if you have a business, the home office deduction becomes huge. Okay. And we teach our people that because a lot of people don't take it. And I used to not want my clients to take it because if you're a sole proprietor, it actually targets you for audit.
Hmm.
There's a special form for it on the tax return. So also, and you mentioned it, when you're a sole proprietor, you're mixing your business return with your personal return. There's no separation there. So when you do the office in the home, you're giving the IRS an estimate of the square footage of your house. So right away, the IRS is saying, well, how do we know their estimate is right? How do we know they're using 20%? So right away, you're open to audit. Now, when you're a corporation, you could take the same exact office in the home deduction through a process which is the same thing as when you do a reimbursed expense report when you have a job. So let's say you're a salesman, you go out, you buy lunch for a client, you get paid back from your employer. Well, when you're a corporation, the same rules apply. So what you do is you make out an expense report
Expense report,
for,
right?
and we actually have a spreadsheet that we developed where you just put your square footage in, you calculate how much you're going to pay yourself back, and there's no form on the corporation return for that. It goes into rent, utilities. The IRS has no idea that you're deducting office in the home, and it's 1,000% legal. But that's it. You guys are asking some really good pointed questions, so I appreciate that.
Absolutely.
Trying
You
to
know,
keep
Fraser and I have been in business most of our adult lives, and it's interesting to hear your point of view because a lot of times when we do research and we talk, we try to have intellectual questions to ask because it benefits us directly. But you're so pointed with your answers. It's just like I'm sitting here going, "Wow, how come I never heard this from people who were supposed to be in the tax and CPA business? What happened? Like I missed 17 years of my life, and I'm sitting there going, now, man, I've incorporated wrong. I got this entity and that thing wrong. I got this, that, and the third. I have to go back and reevaluate."
Well, in defense of my associates in the accounting and legal protection, not many people have my kind of background. I dealt a lot directly with the IRS and with state and local governments handling tax audits, criminal investigations, and I saw how they approach things. And so what's written in the rules isn't what always happens when you're audited.
Mm-hmm.
For instance, I'll give you a good example. There's tax court. Okay, what is that? That's when you get audited, and there's different levels that you go through. So at the first level, you don't agree, you can appeal. Okay, you don't agree with that decision, you can appeal again. Okay, if you don't agree with that, you have the option of taking the IRS to court. Well, what I found out is if you take them to court, they want a last shot at negotiating with you. They don't want to go to court. Okay, it costs them time and money. And unless they have a really good case, just like a prosecutor's not going to court unless they could prove their case. But a lot of cases wind up going to court. Well, guess what? The IRS loses a lot, a lot. So what does that tell you? It tells you that, the system does not favor the small business owner, because who has the time to go through an audit? It's not a pleasant thing.
Right.
But so seeing this, I said, this is the problem. People don't know how the system really works when it comes down to it. A lot of accountants and lawyers are learning it from a book, and that's fine, but unfortunately, it winds up hurting their clients.
I have to agree with that. I didn't mean to interject so quickly, but on 3 occasions, I have my hands up for two because one time we had to settle, but the other time they were just like, don't do it. You don't want the IRS and this, that, and the third. Settle, give them what they want, X, Y, and Z, and blah, blah, blah. I'm like, but wait, hold on. I didn't do anything wrong. I've been doing this for the last couple of years. And all of a sudden now, and they're just like, well, if you go through us, it's going to cost X, Y, and Z because it takes this, that, and the third. We have to do this, do that. And you're probably going to end up in court anyway. Then I heard another guy tell me that IRS always wins. No matter what happens, it always wins. And you're going to wake up one day and open up your bank account to cut a check, and you're going to hear that account has been frozen by the IRS until they settle this. And I'm just like, that's my main expense account for all my bills. If that account gets shut down, I can't pay anything. I can't pay my contractors. I can't pay anything, and now I'm stuck with all that money in that account. 25, 30% of funds in that account for that particular purpose can cripple a business in days, not months. I don't know if people understand that, because it's very hard to find that much money again to say, okay, don't cash that check, I'll send you this check. So the fear factor for me was just like, wow, this is crazy. Like, and I didn't even do anything wrong. You know what I mean? So,
Well, there are people that do things wrong, and the IRS is vetting them out. I just wrote a long email that's going to go out to my clients because we're going to start having client-only meetings because there's a lot of things going on now that it's going to make it harder and worse for small businesses. The IRS is hiring over 80,000 auditors and collection agents. They are making businesses their unpaid police force by forcing them to file 1099s for people and then looking at them to see if those people are employees. And, we don't have enough time to go into all the things that are happening, but it's really what you went through is not, I get sick when I hear stories like that. And I could tell you, I don't badmouth the IRS. Okay. I don't like the people that work at the IRS have always been professional,
yes.
pleasant people. And I feel for them because they're really in a thankless job. Okay. My aunt worked at the IRS for over 20 years. And she approached it like, listen, she was taking the calls when people owed money.
Right.
Okay, which is not a fun conversation. And she told me she looked at it as a way to help these people because it was always like, listen, how can we make this easier for you?
Right.
Okay, so, but the IRS, the laws are written by Congress. Okay.
Yes.
And so what they're doing is they're giving people, they don't give them enough money, they don't give them enough training. So you're dealing a lot of times with agents, again, that are learning this stuff from a book. And I've had this last year 2 experiences that I was able to fix. But one of them, and I'll tell you quickly, it was this woman that wound up with her husband's trucking business. And she was an office worker. She knew how to keep records, but she went out of business. The last year she was in business, she lost over $30,000. Now this wasn't, they were doing over 500,000 in business, so it wasn't fly by night. She got audited. The accountant was probably that's another story. The accountant got her audited by filing the return in a cockamamie way. She got audited. The accountant threw her out of her office, so she didn't get representation.
Oh, wow.
She called the auditor. He told her what he wanted. He just said, fax me all your receipts. Now, this is the way audits are going to be done going forward. Just fax us all your receipts. She didn't hear from him. She got her stimulus check, so she thought it was over. She got a bill for $250,000 in the mail. 50 of it was filing a frivolous tax return. Okay. I got the case. It was already at the point where there was only 30 days before the statute ran out. In other words, after you pass the time limit, you can't even fight them in court.
Mm-hmm.
So what the guy said was all the deductions were disallowed because she didn't prove that it was for business.
Wow.
So, and that happened to me twice in a year. So I was like, this is their tactics now. So with both of them, I wrote a letter. I said, according to section 162 of the Internal Revenue Code, business deductions are defined as being ordinary and necessary. So you explained to me why she would have paid $250,000 in wages and $80,000 in insurance and $80,000 in gas if it wasn't for business.
Right.
And so when I called them, the guy was no longer around. I think that he got canned because this was insane. They wound up sending her an apology letter.
Nice.
They said, we sent that letter in error, because I told them, I said, we'll go to court. I want to see what the judge says to you. And they didn't want to
Right.
go to court. But I can't imagine how many people are out there that just get caught up in this and they don't get the defense. And it's really a crime. I don't know what the solution is, but I know that something's got to change.
I definitely agree
Yeah.
with you. We only have a few minutes left, real quick, but I want to get to the educational part of this because you were saying the IRS just hired thousands of lawyers because, as business people, Frazier and myself, you were saying that people are filing 1099 independent contractors, and the government wants to make sure that for cutting expense purposes, they're not employees, that they're just being filed as 1099. So we don't have to pay the employee insurance, we don't have to pay the workman's comp insurance, and we don't have to pay full medical. That's how it would look on the business side of it. And is that what the IRS is trying to make sure that businesses are not cutting out now because most of their employees work from home, or post COVID, it's just easier to see everything or cut costs? I'm not
So here's the real issue, and this is my opinion. It always comes down to dollars. When people are 1099s, there's no Social Security paid. A lot of those people that were 1099s never file returns. Or if they file returns, like they said, they're taking expenses they're not entitled to. It's just, again, the IRS has no control. If they're an employee, they get the Social Security taxes. I don't know if you heard, but if something isn't done, Social Security is going to run out of money.
Yes.
Other part, and you're knowledgeable about this, yeah, the insurance companies aren't getting the workers' comp, and at another level, the states are not getting the unemployment insurance.
Mm-hmm.
So it's not just the IRS and the insurance company. The states in California, they are on a rampage going after small businesses. They're auditing them, and they're going back 2 years. They're saying, oh, they're assuming that a 1099 person is an employee, and they're saying you owe us 2 years worth of unemployment insurance unless you could prove that they're independent.
Right.
Gotcha.
So all of a sudden the burden is on the business owner again, and
Right.
you're a small business. What are you going to do?
No, absolutely, we understand. I mean, in New Jersey, we have unemployment insurance, but as a sole proprietor, I can't claim it. So every year that they sit there and say, well, you need unemployment insurance, I'm saying, unemployment insurance for who? I have insurance that if I break my leg, that covers me when I'm not working. But why am I paying for unemployment insurance when I can't claim myself or file a claim? Tell me where that money goes. And that's when we've been able to say, okay, well, we'll do this, that, and the third, and hire your services without the unemployment insurance.
Yeah, true. Kind of the same in Florida too. Florida had the same too. But I got one thing to ask you too, because you were saying how like small businesses and how big difference in corporations. Like, what are some of the tips, the steps you can give small business owners, mom and pops, that don't have the benefit of the corporation have, as in like lawyers and everything to get them out certain things? How can you tips you give them to help them out?
Right. For startups.
So, the crux of my email that I'm sending out to my clients is, so let's say they just don't want to be a corporation. They want to stay as a sole proprietor. They got to educate themselves on the financial side of their business. They got to learn how to keep records. Okay. Because if they do get called down, the IRS says, please bring down your books and records. And a lot of people don't even know what that means. And what it means is you got to have the documentation to back up what's on your tax return. So now, if I could give myself a plug here, because on Tuesday, we actually have a free workshop that's going to cover that. We're going to talk about how to keep books and records, because that's what it comes down to. If you get audited and what they're going to do is ask you to fax in the records, and if you're prepared, it's not going to be a problem.
Right. Can we get a link so we can promote that on our social media as well?
If you go to bedrockbusinessbuilders.com and just go to events, the link is right there.
Beautiful.
I could put that in the chat, I guess.
Yeah. So I got one more thing too. Also, like, we think small business owners have a better chance going digital, or still stay paper, or combine them both together.
Everything's
Better.
digital now. And I get paper, I get digital. What they have to understand is when you get an invoice, a receipt, an email, that doesn't mean you have the receipt. Okay, you need to have an organized system. So what we do, and we're going to cover this in the workshop, you have to have what they call a naming convention. And the paper receipts, we scan them in, we put everything into one centralized location. This way, and number one, it's good business practice. Okay. You might need that receipt to get a refund or dispute something, right? Or you just need the receipt to make sure you didn't pay something twice.
Right.
But it's arming you. I believe it's not going to be if you get audited anymore. It's going to be when you get audited.
Right.
We just want to show people how to be prepared for that. And, not for nothing, but you should know what you're doing. You guys seem to know, maybe through, the pain of going through some audits, but you asked me some really good questions. And I believe everybody should. If you're going into business, you got to know this stuff. You got to educate yourself.
Absolutely. Absolutely. Closing thought, real quick. We've talked about um, everything from audits to how to avoid them, what the IRS is doing. What closing thoughts can you give to individuals now like us who have been in business for years and maybe just uh, reframing it, rethinking it, and saying, okay, have a stab at a S corporation and see exactly what happens, so forth and so on.
Well, okay, so you guys have already proved the tenacity that you need to stay in business. Because if you're in business for 17 years, that what I tell people that are just starting out, it's not easy. If you could accept the fact that this is going to be tough,
Mm-hmm.
then you got a chance. Okay. It's not when something is going to go, it's not if something's going to go wrong, it's when something's going to go wrong. So
Right.
just be prepared. It's not going to be a cakewalk. People that are going from academia or a job, they're like, oh, I want to be free. That's an illusion. There is no freedom. There is the freedom that you can write your own ticket. You're in control. But, the best advice I could give people is don't stick your head in the sand. You got to be aware of what's going on. Especially now, you guys being in business for 17 years, there's a lot of changes going on, and it all has to do with compliance.
Mm-hmm.
So you got to make sure you dot all your I's, cross all your T's, and just be prepared. Spend a little bit of time, invest a little bit of time in the financial end of your business.
Right.
Invest a little time creating a process where you can have your books at your fingertips if
Right.
you need them.
Right. Right.
Tools, the technology is out there, so there's really no excuse. All you got to do is be committed and allocate the time to it.
Absolutely. We couldn't agree more. Definitely couldn't agree more.
Um, what if you do an in-state, say United States company, you going abroad, national business? The rules that apply in the United States and filing taxes and everything at CPA, keeping track of business, or is it a little bit different? Because you have business outside the United States and also inside the United States.
Multinational.
Yeah,
International.
so it depends. That's a great question. We actually have clients that are in other countries operating businesses in the United States. So it comes down to their personal situation. So we have somebody from the UK that doesn't have a physical presence here, but they needed to have a United States corporation in order to do business like with PayPal and stuff. Some platforms like Spotify, they require you to have a US based company. So it does get complicated, but if you're a US citizen and you have businesses abroad, you're taxed on all of your income. They call it worldwide income.
Mm-hmm.
So we do have a couple of clients that are, some of them are from Canada, some of them are from New Zealand, believe it or not. And they're all subject to their own country's laws, but they still got to file and pay taxes in the United States, believe it or not. And just to add to that, the world is getting smaller. The countries are all talking to each other now. So, just like in the States, in the United States, it's, the countries don't want to get gypped out either.
Right.
So there's no more hiding. You can't hide. I call it hide in plain sight.
Absolutely. Well, listen, we're going to leave it there. Joe, we thank you for taking the time out of your day to come and talk to us and talk to our platform and our listeners and viewers. And we would definitely love to have you on with a deep dive for more corporate growth. Like, for instance, if we're going into real estate and we're dealing with multifamilies, which are big, and other ventures of that nature. So we definitely appreciate you.
Okay. Thanks for having me on. I appreciate it.
I appreciate it. Appreciate it so much.
Thank you, sir.
Welcome to the George and Fraser family. We're
Absolutely.
family.
Awesome.
Thank you, sir.
Thank you so much.
Thank you. Have a good day.
Yes, sir. I hope you guys appreciated that knowledge, dropping jewels. Even after 17 years in business, you can definitely learn something. I was definitely here taking notes. We want to thank Joe for coming on. Check out Bedrock Business Builders. Go to the event section and check out that event. I will definitely be there taking notes, listening, and watching on next week, Tuesday. This is tax season, so everybody pay attention. Hey, this is George.
Hey, this is Fred, and tune in.
That was Real Talk.
Tonight, 7 p.m. Don't forget it. Don't miss it.
That was Real Talk with George and Fraser. Peace.